Welcome to XM.com for today's daily market comment by Raf Boyajian. I'm Cristina Marujos. After a highly turbulent week, the mood brightened somewhat on Friday, even as the tragedy unfolded in Ukraine. Stock markets around the world were rebounding from yesterday's dramatic sell-off. Risk assets were in slightly better shape today, while safe havens such as gold and the US dollar were off their highs. However, with Russian troops reportedly closing in on Ukraine's capital, Kiev, the conflict could get a lot messier, and the West may have to respond with even tougher sanctions than the ones announced yesterday. The United States, Britain, and the European Union slapped sanctions mostly targeting Russian banks and individuals, but they stopped short of more crippling measures. This likely came as a relief for investors as it limits the economic fallout from the crisis, at least in the short term. Moreover, after the S&P 500 entered correction territory, it was another opportunity for bargain hunters to buy the dip. The rebound was led by technology companies, which lifted the Nasdaq Composite from a 3.5% loss to a 3.3% gain, while the S&P 500 closed up 1.5%. Shares in Asia and Europe were boosted by Wall Street's reversal, but the rally already seems to be fading as U.S. futures have been in the red today. Diminishing expectations that the Fed will raise rates by 50 basis points in March is probably just about the only tailwind for U.S. equities right now. However, FOMC members are clearly split on whether a double rate hike is necessary. Hence, today's PCE inflation and consumption figures for January will be watched closely. Speculation that the ECB may delay normalizing policy because of the Ukraine invasion was one of the reasons why the euro plummeted so much on Thursday. The single currency slumped to a more than 20-month low, and although it has since recovered slightly, the dollar appears to be catching a bit again along with the Japanese yen. On the other hand, the Australian and New Zealand dollars bounced back more strongly against their U.S. counterpart today, possibly getting a boost from the broad surge in commodity prices, though the loonie was only marginally firmer. Brent crude was back above $100 a barrel today. WTI futures were on the rise too, while gold reclaimed the $1,900 an ounce level after swinging wildly on Thursday amid the volatile situation in Ukraine. Thank you for watching the Daily Market Comment here at XM.com. Have a great weekend.